Vince-Lanci is back with a new reset for us today, and he'll be telling us what we should be paying attention to coming up right now. Well, what can I say, Vince? I'm so happy to be back and at least hear from you today.
Thank you for having me back, and welcome back. You were missed.
So many key things happened since I've been gone, Vince. One of them, ECB President Mario Draghi speaking last week, stating that, hey, look, we're prepared to do whatever it takes to save Europe. So, Vince, my question to you today is, help us refocus, help us reprioritize. What should we be paying attention to right now?
Well, Mario the magician, Mr. Draghi, made a statement, an unqualified statement, an adamant statement that Europe would do whatever was needed to get out of its crisis, which was something that you would not hear such definitive things out of European politicians. A little background. He has a very close relationship academically with Ben Bernanke. And we believe that he had a quick conversation with Ben and seeking a little possible tactical advice. And afterwards made his statement. I say magician because the markets levitated on his words. They were taken very seriously. The euro popped 2 cents, 200 basis points. Stocks were up. It was risk on. Gold rallied very hard. It looked like Europe was ready to take a stand. Then a day later, less than 24 hours later, Germany pops the balloon. And they say, I'm not sure how to say the gentleman's name or lady's name, Schäuble. They basically say, what Mr. Draghi said, we haven't agreed to. And that was basically this. They were looking to license the ESM as a bank. And if you make it a bank, then you protect Germany, and at the same time, you can use it as a bailout mechanism for the other countries. Well, so Draghi says some very definitive bullish things. The ECB and the more austerity types in Germany say we haven't agreed to anything. The markets don't really collapse. The equity markets and the other risk markets don't really collapse. They kind of hold their own. The Spanish and Italian bonds hover towards crisis levels again. S&P and Moody's do some more downgrades of European companies and or countries. And everyone's looking for Ben Bernanke to do something after that, actually before that, and he did nothing. So we are where we were, and that is in a situation where hope springs eternal, or as you say in Italian, hope is the last to die. And the Europeans say something, the market goes up, it's discredited, but the market doesn't quite get back down. So we're looking at a levitation act. We stick to our guns that we're pretty sure nothing will be done until the end of the year. However, the trader talk is that Ben's going to do something in September. What that is, we don't know, but we don't put a lot of hope in that. But it doesn't mean we're going to get short the markets because they seem to be levitating on their own.
So Vince, just to clarify, you're not certain or sure that Bernanke will do something in September, yet offline, I know you have told me that you still think 1900 gold is a possibility before year's end.
Yes. So it seems contradictory. I guess that's what you're putting me on the spot for, right?
No, not on the spot, Vince, just recapping what you've told me.
No, but it actually, when you say it that way, it sounds like a little bit of a contradiction, and I'd like to speak to that.
Go ahead, Vince.
First of all, it doesn't look like the markets right now are not perceiving Europe as going to the euro as disintegrating. Europe, and let's specifically Germany, wants a weak euro. They want to export themselves out of trouble. They just don't want to admit it. So you're going to have a controlled descent of the euro lower. Over time, not today, not yesterday, not next week, but over time. When that happens, you will have a signal which will be right after the election that Ben Bernanke and the Fed can do something more to bolster our own economy. And then I think you see risk on and things start to go up again. Even if this doesn't happen fully, I think what's happening in the world is you're looking at a slow remonetization of gold, meaning it's a commodity, it's money, it's both. So right now, everyone who needs to raise cash is king, will sell whatever they have. Now, if you're a European bank, you can't sell your Greek bonds. You're not allowed to sell the things you're losing money in. You have to hold on to them. But you can sell your gold, and so they're doing that to raise money. There's going to be a collateral crisis in Europe because all the good collateral is going to be sold, and the buyers are China and Western countries that have the wherewithal to do that. When it's over, if you have a deflationary crisis and we're totally wrong and nobody eases, gold will compete with the dollar as a safe haven, and you will see it be, at least, as we said before, the tallest pygmy. That's if we're wrong. If we're right, and Bernanke does something either in September, as people are discussing, or after Europe does something, then you're going to see a big move into inflationary type of assets. And those would be equities, and those would be gold. And we think gold would outperform at that moment.
You know what, Vince? I just can't wait for September to roll around, since I really feel we're going to see a lot of activity that month. But let me ask you, the ascent to 1900 gold, is it something that we'll see happening slowly, or is it something that could possibly happen overnight?
That's a good question. I'll give you both scenarios, because anybody who picks one and stands by it 100% is just looking for headlines. We think right now the market is in a slow climb higher to 1640, possibly 1680. Now, I'll give you specific numbers. If the market stays above, we're talking about inside ranges here. If the market stays above 1601, we're looking for 1640, 1645 area, and then the 1680 area. We think that'll be an orderly move. Now, does that mean we can move $40 in one day? Yes, but it could also mean we can retrace $20 the next day. So we think you'll have an orderly move to the 1680 area.
Right.
Above 1680, we think the market starts to catch momentum. And then you'll see the trend players come in, the momentum funds come in, and they'll be buyers of strength as opposed to buyers of weakness. Right now, you're seeing the market being bought by, call them fundamentalists, buyers of weakness. It gets cheap, I buy it. It gets cheap, I buy it. It gets to a certain level on the upside. The algorithms that buy momentum will say, oh, above 1680, we think the momentum is there for slippage to 1800. Then you'll start seeing some quick moving action higher. Overall, we think that this move, this next move higher, if it happens, will be in its final phase, more violent, more frothy, and on lighter volume than the move to 1900 before. But it will end in a frothy spike. There is one event, though, that we haven't brought up. And so the Fed does nothing till the end of the year. Europe continues to levitate and then fail in its attempts to do what it has to do. Right. It hasn't been brought up in a while, and we're just going to bring it up not to scare people into going out to buy gold, but there's a shot that Israel is going to do something by the end of the year, and that would be your surprise event now. No one's talking about it anymore. No one's talking about it in oil. No one's talking about it in gold. That's your surprise event for the end of the year. An Israeli attack. I would handicap it at a 40% chance of happening. But to answer your question directly, we think orderly to 1680, and then from there it's going to get volatile and frothy above 1900.
Okay, so orderly until 1680. Now, Vince, let's talk about that stalking horse you were telling me about offline.
There's a term used in real estate that I'm borrowing called stalking horse. We've sent you two charts, and the first chart refers to the stalking horse. The stalking horse is the buyer underneath the market that no one knows about. In this case, if you look at the weekly chart that we sent you, you'll see in the candlesticks for the last, say, 8 weeks, there have been long wicks or long tails on the bottom. And that's usually a sign of massive immovable buying that people are testing and then the market runs away from. And it's circled on the chart that I sent you. We believe that is China or someone like China buying gold. It's been tested many times, and I think that's where our 1525 area came up with. Tom, we talked about it before. 1525 was our line in the sand. If you refer to the second chart that I sent you, which is the daily chart, you now have an upwardly sloping line. So we think there's buying that's creeping in above 1525, 1535, 1550. So the stalking horse is a fundamental buyer who's, say, if they're China, de-dollarizing their assets. Say if they're a European central bank, diversifying their currency reserves. But there's definite fundamental monetary related buying underneath the market. So if we're above 1525 today, by the end of the year, then we should be above 1900. That's what we're saying.
Vince, thanks again. Thank you for refocusing us, reprioritizing us, and most importantly, trying to guide us.
Thank you very much for having me, and let's see what happens.
Thank you so much, Vince. As you say, it is what it is, and we'll see what happens.
And we will see each other next week.
Absolutely, Vince. Thank you so much. In the meantime, you can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.